Options Tender. What a wonderful week. I love volatility. Traders love volatility. Thanks for joining us here. Before we get started, if you're new, hit that subscribe button. There is an icon on the bottom right-hand corner for Options Tender. You can press on that. There's a subscribe situation there. Also, hit the like button if you like this information. It helps us spread the word and spread the wealth. There's a lot of new traders out there that we want to get to and make sure we help guide them, protect them from doing some of the things that we've done in the past. So we have a bunch of things to go through. So this will be a longer video, but please stick with us. I will start off with the SPX. We have a lot of volatility happening. The sentiment seems to be switching to bearish. We have a huge rotation from financials and oil into tech. And then I'll go over the expected move and check out some of the trades that we did this week and show you how orderly they were. With that, let's jump into it. We're going to start off with the SPX on the daily. I added these, if you're familiar with some of my charts now, I added this almost pitchfork type action. What it is just two channels here. The original channel is the top one. It kind of guided us through the first moves, and we broke through it. And we broke through it again. We ended up here. It's essentially just leading the 20-day moving average and the 50-day moving average. So, it's nothing special. But this helps us guide us in maybe to just let us know that there might be a bounce right here, just like what happened at this point. And also with our Elliott waves, we have wave 1 down to wave 2, and that means that we're headed higher for wave 3. Now, with the MACD crossing over and headed to the downside, how can we say we're headed up already? Well, I have a lot more things to show you. We can head down further. That's definitely a possibility, but I think we're gonna bounce at this point, at least just a bounce. And I'll show you why, because I think tech's gonna lead. Let's go ahead and move over to the QQQ. Let's see what's happening over there. I don't usually do all of this information, but I need to show you what I look at and how I determine things. Well, the QQQ, let's be honest. Do you see what I see going on right here? First of all, we broke the long-term trend. We hit the top of the channel. We declined after that. Well, we're hitting support right now. On the lower time frames, we'll see some sort of wave counts that's happening, but do you notice anything else? Also, we're bouncing because of the MACD. We're headed right to that 0 point, and we talk about the MACD often. That's usually a spot where there's some support there. But let's add left shoulder, head, and somewhere over here, maybe the right shoulder. So we're looking for a 5-wave move, something, and we'll consider this a back test. It doesn't have to come all the way up that way, but we'll consider that a back test of this trend line. With the moving averages starting to curl, the 8 MA, we just have to watch out with the momentum heading down. Well, I think tech is going to lead us this way to the upside, maybe form a head and shoulder. And clearly the IWM is the leader in this market, and I don't think that's going to stop. I just know that it needed to cool off. We came up, fake break, probably down to the 50, and maybe move up a little bit more for a marginal new high. And that would give us another divergent high at that. So that's another clue. XLF, we have our financials. The financials, they broke out to all-time highs. It's clearly bullish, okay, leading the market, holding everything up. Well, all they need to do is, they can't hold up the market right now because they need to cool off. And all I expect them to do is come back and retest over here. But we have these divergences, these bearish divergences, and, now all the weight has to be on tech if that's going to bounce, because financials are leading a little bit lower. So this is kind of near to intermediate term. but a lot of information going on there. And XLE just it sort of follows financials. And you look, actually, let me back right back out. We had divergent highs, bearish divergence, and we came to about an equal bearish divergent right there. So, but we have a long-term downtrend that we nailed. This, I didn't just put this downtrend there. This has been there for a while, and hit it right on the nose. And guess what? It's pulling back. Well, I don't know how far it's going to pull back. Maybe the 20 moving average, because this is the most bullish chart of them all in the near term, or the 50. You know, we may fake break right back into this area. But with financials and oil pulling back, tech, if we're going to go higher, tech has to pull us that way. So that leads me on to some of the trade ideas, some of the things that I did intraday today. Now, I will set the link at the end of the video, and also maybe put a card up top there. You'll probably see it, of some of the ideas that I had. If tech's going to lead us, then who better else than to put a play in on Tesla? But I used an in-out spread, and that's the key part. I got in there just a little bit early today, but with an in-out spread, you have up to, I think I did a 30-day in-out spread on that. And just check out the video. It's a very safe way to trade and a very cheap way to trade Tesla. Same thing with Apple. Apple, you don't see this on there because I don't have the Apple in my IRA. I actually have a long position, but it came down to the bottom of the channel here. Perfect spot for a bounce. I know it's in a triangle, but I don't suspect, even if it does break out of the triangle, it could be a possible. It happens a lot. Fake break out of the triangle and then up to higher highs. But I know where my stop is. I know where I'm wrong. If we come underneath this channel, I'm out. What's next? I want to go over to, before I head over into the trade ideas and other things that showed this orderly, let's go over to SPX one more time, just so I can show you this information before I forget it, and show you the expected move. I didn't mark the expected move lines in there, but notice that we had a small range. It started off smaller here, expanded because of the volatility, broke through the options expected move on the bottom side, broke through again, testing the 50, and we could bounce here, but according to momentum, after we bounce, we may head to the downside. We'll see. We have to watch price action. We cannot predict, but I do have bullish plays on. Now, the other lines that I'm going to draw in a little bit here, maybe tomorrow, they have expanded. SPX, the options expected move on the 5th for next week has expanded to 125 points. So it's going to almost surround this one, because I believe this one was 75 points. So it's going to surround this. The volatility is up. We're going to move, whether it's down or up. We're going to move fast, and we're going to move hard. And that's great for trading. You just want to be in the proper types of trade. That's why I do in-out spreads when things get wild like this. We did have some puts on earlier today that made bank, but when we're trading individual names, we want to make sure that we're kind of limiting the amount of risk that we had, and that's what trading is all about, managing your risk. So I did enter into some other plays. We'll run through them right now in front of you and just show you how orderly these trades are. So SL, I said this in a video, I believe yesterday, but it came up probably for the end of the 5th wave down, and it looks like we're making a new wave 1, 2 of wave 1. So we're headed higher, but wave 1, 2, 3, 4, 5, probably into resistance, head to a wave 2 and higher again. Okay, so everything's been setting up, and all the charts, pretty much for the most part look the same. I'll go back to Apple here. Came down, bounced, wave 1, 2, and higher, right? That's possible. Tesla made its ABC correction, wave 1, 2, 3 higher. Boeing, a little bit different, but made its 5th wave, in my opinion, coming down to wave 2. We'll see where that ends up. It might come a little bit lower there, but look, watching that one, just the corrective move, it did not move that much. It took away all of the breakout move there, but it's okay. We're still in it. We have 25, 27 days out. And Uber also in this corrective move. I thought this was going to be wave 1, wave 2. It came down a little bit lower, but we're still right on stick save on that trend line. And I think we may move higher from here. Pins. Real bullish chart. Let's see where we're at. Real bullish chart, and came back to support for wave 1, possible wave 2, and higher. So I think we're going to make all-time highs and pins. And this one, you know, United Steel, I want to talk to you a little bit more. We made our wave 1, 2, 3, 4, and 5 to end this wave 3. But here we now have a wave 4. Okay, that wave 4 could be over, and this is a wave 1 and down a wave 2 to go higher. Or you can kind of notice what's happening here. You know, these inverse head and regular head and shoulders, right? So if we break underneath this point, this is my stop. I'm going to get out of this. If it peaks through here, closes on the hourly, then I think something else is happening, and we'll probably go for an A, B, C correction down a much lower on that one. And that's okay. That's healthy. We'll look to get back into it. But just know when you're wrong on these plays. I got a lot of plays on, but they're all set it and forget it type plays. Okay. One more time. I will put on the link for in-out spreads. I want everybody to be safe. They're cheaper ways to do things. Look at Tesla, for example. I'm talking to a gentleman about how to trade just a little bit cheaper. And this is a great example. If you go over to Tesla, you'll see I have a trade in there under, it's 21 days out. Okay, so March 19th, 21. That's my expiration. And all I did was just simply buy a call at the 670 and sold a 675 against it. And that keeps your trade, that's a $5 wide spread. So that keeps your trade down to a maximum of, don't spend any more than half. It cost me $2.50 for this trade. When typically, if you want to play Tesla, especially 21 days out, if you're doing a naked call, even here at the money, that's $4,795 just for one call. Okay, if you're new here and you are trading that amount of money, you are putting all of that at risk. Okay, so we want to get your game set, ready before you start risking that kind of money. So this is a simple way. I like one lots. I'll go one lot all over the place because I look at my watch list is so big. I have so many different things on my watch list that I trade. So I do a bunch of one lots. Okay. I'll trade these all day long. One lot, one lot, one lot, one lot. So that's the kind of trader I am. You can do your individual trades concentrated into one or two. That's fine. Everybody has their niche. You'll find yours. But just want to show you all those items there. And then lastly, just to end this video, let's see what happened today down to the ES. Let's go down to the hourly 65-minute chart and see that we had our breakdown here. This is our correction. We think this is a wave 2 correction. Well, we had our ABC correction, and we thought that might be it. Well, after this ABC up, which is turned out to be a correction to the upside, we found out that was just a larger part of our game here. We have a correction of A, larger wave A, larger wave B, and now, did we finish wave C? I think so. But there's still a possibility that this is just a minute part of wave C as well. So after B, maybe this is, I think we're done. I'm playing this as if we're done. And we head higher. But we'll have to see next week if we crack back down to make another divergent low, because we did not quite hit the 37.75. That was the 61.8 retracement. And we came really close to it. So I'm playing it as if we did. We'll continue to monitor this. It's a huge consolidation area. It could break either way. Okay, so you just be careful with your trading. Trade small. Um, just use in-out spreads. Protect your positions. If you do have large call positions, protect them with some buy puts. Everything's expensive now because volatility is up. So if you are in calls, naked calls to the upside, make sure you're in the money, because as volatility crushes, if the price does move up, it's going to crush the price of all options. Okay, and especially extrinsic value of options that are moving to the upside. So your gains will not be that large, even though you pick the right direction. Okay. All right. So I'm going to put a couple videos at the end if you're swing trading short term, and if you have in out spreads. I use both of those, and I'll put those at the end of the video. So thanks for joining us here at Option Center. Have a wonderful weekend. I know that's a lot of information. We will go over some more information on Monday morning. Thanks. Have a good day.